Today we are talking about bracket orders, which you might also know as GTT, which stands for Good Till Triggered and is provided by the most commonly used broker of India, which is Zerodha. What are bracket orders? How to use them properly? I will give you a step-by-step guide to that. But first, let's understand what they are, what bracket orders are, and what is the advantage of using that. In order to explain this to you, I have prepared a presentation. So now I will share my screen and show you the presentation. But during the session, just keep in mind to listen to what I'm saying carefully, interpret it in the way it is meant to be. And if you have any questions, feel free to add them in the comment. These can be related to the presentation or related to stock ideas. If you need any stock queries, mention them in the comments, and at the end of the session, I'll take 10 to 15 minutes, depending on how much time we have remaining, and give you a response. So with this, let's move on to our session. All right. So bracket orders, right? Bracket orders are also they have lots of different names. They can also be called one cancels other. They can be set with market orders as well as limit orders. So bracket orders are nothing but they are a type of cover order wherein you can put two opposite orders from a single order panel. What this basically means that suppose you take a long position or a short position, you can at the time of making the position itself, you can make a cover order in order to make sure that your exit happens at a price where you intended to it for it to exit. Now the thing is that in bracket orders, the general conception is that it is used only for making exits or for setting your stop loss and target. But the truth is that bracket orders, the GTT orders or one cancels other kind of orders can be used for creating new positions as well as for covering your existing positions. They can be used in cash market and FNO market, and of course the rules at the baseline differ for both. In today's session, we are going to discuss only the cash segment applications of bracket orders, that is only on the deliverable orders. We are not going to discuss how these are used for leverage or intraday trading. Reason being that for leverage trading and intraday trading, shorting is possible, and these orders behave differently when you're using them for FNOs. Okay, so now what I'm going to do is we are going to get into the details of what are the advantages of using bracket orders. So the first advantage is naturally better risk management. And how? Bracket orders or one cancels other kind of orders allow you to set your predefined stop loss and profit levels. This helps you to manage your risk by ensuring that you automatically exit the trade if any of these levels are coming. It protects your position against unnecessary losses or capital drawdowns, and it also allows you to exit the position and book your profit, which without bracket orders you might get tempted to not exit. Which brings me to the second advantage, which is emotion free trading. By setting predefined price levels for stop loss and take profit or targets, what you do is you avoid the unnecessary decision making at the time when you should be doing your execution. A lot of times our biases come into play, especially the greed and fear. These two emotions are the biggest enemy of any trader in the stock market. So when you set a bracket order, it allows you to eliminate the emotional element from your execution, because it forces you to make decision early on. If you remember, or if you attended the last week session or last couple week session where I've been talking about trade tracker with the members, this trade tracker and the GTT or the bracket orders is actually used together. So in the trade tracker also, the whole idea was that you remain emotion free and stay objective with respect to what kind of trade you are entering in any particular stock. I mean, at one point of time you might enter a stock for long term, at another time you might want to enter the stock at a for a shorter term, right? You can, since there is different kind of participation possible in the same stock depending on the trade setup, chart setup, depending on the economic cycle, depending on the stock market cycle, you need to be very clear about what your objective of entering a particular stock at a particular time is. So bracket orders and trade tracker, when used together, help you ensure that you're not slacking off where you need to show that discipline. Now, with the bracket orders, you also don't need to always actively monitor your portfolio or your positions in the stock market. This is especially very useful for people who are working at a full-time job or have an existing business which is not related to financial services or stock market specifically. Now, what happens is during the daytime when the market is on, you might not be able to give 100% attention to the market. At the same time, I'm sure you would not want to miss out on key opportunities of entry or exit. Entry into new position, existing and exit from existing positions where you might want to, get out to limit your losses or get out to book your profits. Either way, when you use bracket orders, you don't have to actively monitor it as long as you've set it up properly, and if the price comes, both your execution and your trigger price, the order will get executed. You see an asterisk beside it, and the asterisk is because this is not always necessary. Sometimes people might mistakenly put a huge gap between the execution price and the limit price, or the trigger price and the execution price, and as a result of that, the order may go in the order book but not get executed. I'm going to discuss this in a little bit more details a little later on. First, let's go through all the other advantages. Now, time efficiency is very natural, right? Bracket orders, since they are automatically executed when the levels are reached, you don't really need to constantly monitor the stock or your position, which really frees up your time. Then there is better execution. How does it help with better execution? Again, since advanced trading platforms provide you features like OCO, that's one cancel other kind of orders, what you can do is you can set this up, and when your target gets executed, your stop loss order automatically gets cancelled, and vice versa. If your stop loss is being executed, the target will be automatically cancelled. And this is obviously very important, especially in FNO, because if the order is not cancelled, if the counter order is not cancelled, then that is also going to get executed if there is a huge fluctuation. Discipline and consistency. Now, using bracket orders can encourage more disciplined trading, especially for retail traders, because it forces you to define how much risk you are willing to take and what profits you are expecting from this position. When you have your trade set up ready in advance, that is, when you know where you're going to exit before you enter a stock, what happens is it also makes you a happier trader, because in the trade market, in the stock market, if you think there's always a lower price where you could have bought, there's always going to be a higher price where you could have sold. But you need to know what your risk capacity is and what profit objectives you're coming to the market with, and if they are realistic, and with discipline, if you're able to achieve them, you will be happy and be able to aspire to become better. Another major advantage of using bracket orders is that because it forces you rather to think in advance or have a strategy before you enter a trade. It also enables you or puts you in a better position to use trade tracker. So the trade tracker and bracket orders or GTT orders go hand in hand that way, and over time they give you sufficient material to study and bring about improvements in your execution style. Now we'll move on to how to use the bracket order. Having a disciplined and systematic approach is very important. So what would be the step by step to actually getting into with the keyboard and the mouse, how would you actually use the bracket orders? Right, so that will be in the next slide. Here we are going to think more about the psychological perspective of how do you need to mentally prepare yourself in order to use these bracket or the OCO orders or the GTT orders, good till trigger orders. So first of all, commit to a trading style. What this basically means is decide whether you want to trade in the market for long term. Do you want to be basically an investor? Do you want to swing trade in the market or momentum trade in the market, which is what I do personally? That is, buy a stock, hold it for maybe 2 weeks to 3 months, depending on the underlying personality of the stock and the style of its movement. Or do you want to be an intraday trader, which is something I honestly discourage people from doing. Too much work, very little reward. So firstly, commit to a trading style. Secondly, depend only on thorough research and analysis. See, if you're able to do your own research and analysis, good for you. But if you're not somebody who's attuned to the market cycles, who's not very well aware of how bad market risk can actually get, it's always good to associate with a research analyst and then depend on their analysis. But yes, when you associate with a research analyst, it's very important that you at least get a rough sense of what they're doing and you're comfortable with that kind of working, right? So whenever you, and of course, the ET live stream platform is a great platform to finding a lot of research analysts. People come and share their research, including me, quite often on the platform, right? So once you find a good research analyst, make sure that you depend like you use that properly rather than adding your own layer of biases, your own layer of filter, your own layer of uh, subjectiveness to the analysis, because obviously the analyst who's provided you with the levels has already, unknowingly incorporated their own set of biases into those levels. So if you start doing your own math on that, then it really makes things very difficult and non-profitable for you. The next thing is you will need to monitor and adjust when you're using bracket orders. For instance, you entered a stock, you set say a 3% stop loss and a 10% target. Now when the stock moves towards your target, you need to adjust your stop loss. Now usually if you're associated with a research analyst, they will update you about the trailing stop loss. Learn from experience. Now when you're using bracket orders, there's a lot of skill involved in using bracket orders itself, in terms of whether you should put your stop loss or your trigger order exactly at the stop loss level or the target level. Should you put it a little bit higher? Should you put it a little bit lower? What are the kind of stocks? Which are the stocks that you're actually trading in? So when you do things mindfully, your mind automatically, collects a lot of data. And whenever you combine that with the trade tracker, you just take things to the next level. So learning from your experience is very important to improve your execution using bracket orders. Now, continuously improve your skill is basically an extension of the above point. Now, suppose you've already covered these 5 steps of, how to come into the right mental frame of using the GTT orders. How do you go forward to it? So this is a step-by-step guide. Basically, bracket orders naturally help you in defining a trade effectively and simultaneously setting the stop loss and the target price. That's pretty obvious. So the idea of doing it is, firstly, identify your trade setup. And when I say trade setup, I don't mean identify long-term swing trade or intraday. I mean the exact trade setup, as in what price you're going to buy at. If you're going to add to the position, what price range are you going to add to the position at? If the price goes against you, what price are you going to exit at? If the price goes in your favor, what would be the target where you would, say that this profit is good enough for the risk that I wanted to take, and this is where I get out. Again, that is obviously cannot be decided on an arbitrary level. It's usually best decided on the basis of technical analysis and chart reading. Then is calculating your position size. So because when you add a OCO, you also have to add the quantity. It's very important to make sure your allocation strategy is very good, because if it is not, then invariably you will end up allocating too much to the very risky stocks, because at the back of your mind you're thinking of getting rich too soon, but you're not thinking that if the trade goes wrong, it will also take away a big chunk of your portfolio. So when you have a proper allocation strategy, usually your research analyst will help you out. At least with EXP-Invest, I help out my members with the allocation strategy as well, where I tell them exactly what percentage of their portfolio they must be investing in every single stock idea, and how risky the stock idea is in terms of, low risk, mid risk, high risk. And this is very subjective labeling, but it's on the basis of the observations which I'm making in the personality of the stock, the market cycle, the price cycle of the stock itself, the general economical conditions. There are lots of variables in there. But yeah, you need to calculate your position size first and then set your entry order. So even for even if you want to make an entry in any particular stock, and your analyst has say indicated to you that, you know what, this stock is showing a reversal pattern or a reversal signal, and this is the buying range where we should try to get it. Now obviously during the daytime it might not be possible for you to sit and monitor the stock and wait for the exact price of say 80 rupees to come so that you can buy it. It's always useful to, you know, even if the stock is trading at 84, you can just set a buy order at 80 rupees and 5 paisa or 80 rupees and 15 paisa, so that whenever that level comes, your order is automatically executed, even if you were not online and monitoring the market actively. In that case, what is important is that after the day ends, when you're done with work, just sit and make those entries in the trade tracker. This will help you stay on top of what were the executions that happened during the day and whether they were in line with your expectation or not. Usually this exercise takes about 20 to 30 minutes, not more, unless you know you are putting too many orders at very close prices, giving a lot of volume of execution. Then is set up your stop loss and take profit levels. This is a choice for you. You can set up your stop loss and target orders in line with whatever target quantity you're trying to purchase at the time of setting your entry GTTs, or you can do it after you're done accumulating your position, right? So in order to do this, all you have to do is take the stop loss and the target level and put them in on the OCO order of Zerodha. I will give you more specific instructions in a bit. So with respect to stop losses, you might have a question that if I set my OCO orders and say the stock does not finish accumulating to the level that I want to. Suppose you want to accumulate 100 stocks, but so far using 4 GTT orders of 25 quantity each, you were able to say accumulate only 75, and before the fourth order could be executed, the stock starts going up, but you've already set stop loss and target for around 100 stocks instead of 75 stocks. So your question would be whether if this, you know, OCO is reached, as in the target is reached before accumulating all 100 stocks, then will the stocks be sold? The answer is no, because you've set an order for 100 stocks but you're holding only 75 stocks. In that situation, the system will automatically reject your order. That is why monitoring your positions is very important. Monitoring your bracket orders is very important. On the other hand, say you kept on, your intention was to edit your stop loss and target orders with every execution of the entry GTT by GTT. In that situation, you will have to increase the quantities, because say you manage to increase your quantity of the stop loss, your OCO order, which is the stop loss and the target order, up to 50 quantities, but then you had few more executions of the by GTT. In that situation, when the target is achieved, only 50 quantity for which you have a bracket order set will be executed. The rest will continue to be in your portfolio. So that again emphasizes the importance of monitoring your set orders and executions. And the fourth point again is the same as the previous slide, basically review and learn. So now, how do you practically do it? Here I am using the example of Zerodha, and there are other brokers which have started providing the GTT orders. Though I have not used them personally, but I hear there are some brokers who are giving this. So I'm not even sure if those bracket orders can be carried forward to the next day or not. But I know for sure that Zerodha does it. So let's discuss on Zerodha. Now, another one small thing, that if you want to have, if you don't have a Zerodha account, but you would like to enroll for it, you can use my link to set up an account. And in order to make that easier for you, I'm going to quickly share the referral link. Basically, the referral gives me few points which help me do a little bit more research using other Zerodha resources. So what you can do is click the link that I have shared the referral link in the comments, and you can click that to open your own account. So before I explain this, I will answer a query. Mr. Yashraj is asking about identify trade setup. Please explain more. So I'll just go back for a short while. So he wants to know what is identifying trade setup, or what it basically means to identify a trade setup. So okay, so trade setup, I'll also show you an example for this actually. Just hold on. Give me a second. I'll give you an example of what a trade setup actually means. And this is what I have been doing for a lot of my members, and I've been getting quite good responses. But just looking at this is going to help you give a very good idea of what exactly is a trade setup. Hold on. All right. All right, so what you can see on the screen is actually a trade setup for a stock idea that I gave to my members few months ago. Yeah, like in March. So here you can see the name of the stock, right? So Goldium is the name of the stock, and here you can see that it belongs to the sector jewelry. Now, what the trade setup is right here. So this bit is your entire trade setup. Basically, what price did I spot this opportunity at? What is the stop loss? How far is the stop loss from the stop price? What is the target price? What is the risk reward ratio? This is the trade setup. The trade setup is nothing but stripped down to numbers of what you're buying, at what price you're buying, at what price are you going to continue to buy, what quantity are you going to buy. So you can see there's an allocation strategy here. What is the risk reward that you're getting for entering into this trade? This risk reward is nothing but a ratio of your target divided by stop loss in terms of percentage, right? So for example, in Goldium you can see that I am recommending my members to buy Goldium around the price of 137.9 for a stop loss of 119 with a target of 199. This was posted on the 10th of March. So this is a trade setup. Okay, now if you ask me how do I go about determining the trade setup, well, that's the whole game. That's something that for which I have studied CMT, CFA, been practicing in the market for 10 years, and since 10 years, and also trying to become better and better every single day. So the art of designing the trade setup is really hard and takes a lot of skill and lots of education, a lot of practice most importantly, but the execution is a lot easier part, and that is where I believe retail traders should put more of their focus on. So Yashraj, I hope that was useful and helpful. So we'll move on with our discussion. Yeah, so I was on this section where I was telling you how to create GTT. So if you also just write Zerodha guide for using GTT on Kite, you will easily get this entire link. The idea is that in a watch list, once you've added whatever stock you want to create a GTT on, all you have to do is click on the menu and click on select create GTT. Alternatively, you can also create GTT from your order book or your position book. Again, all you have to do is where you can create GTT anywhere there is a stock name in Zerodha. All you have to do is click on the three dot menu, right? So select GTT and then go about creating it. So how you'll do it on the mobile is basically you're going to have to long touch the stock idea, as you can see in this GIF. And once so let's just wait for it to begin from the beginning, because it's a GIF, I can't change it. So here, see, all you have to do is just long select the stock. You see create GTT button right here, click on it, select the type of GTT you want to set. Right here they're setting a buy GTT order and a single execution. So here you set your trigger price, you set your limit price, you set your quantity, and that's it. GTT set. It's very easy. Now there are a few things that you need to take care of when you're setting a GTT. Now, for instance, here on the stock of Reliance, you can see that the trigger price has been set at 1500 and the execution price, the second field for entering price, is basically your execution price. It is set at 1505. Now, this price is by default a limit order. I hope you know what a limit order is. Now, what the trigger price is, let me tell you first. Trigger price is the price which, if the stock of Reliance hits, the order will go from your will go to your order book, and this limit price is the price up to which it is going to get executed. So basically here 1485 is your CMP, right? And the trigger price of 1500 is higher than the CMP. Now The whoever is executing here, the strategy that they are using is the momentum strategy. Basically, they are saying that, you know what, if there is enough momentum in the stock and if the stock goes up to 1500, I am willing to buy the stock for as long as it goes up to 1505. Above 1505, I'm not interested in buying. Okay, now as a positional trader, what I prefer to do is this. So when I want to purchase a stock, say 80, say Reliance is at 14, or say Reliance right now is at around 2200. Excuse my handwriting, but say Reliance right now is at 2200. I have studied the chart and I think that Reliance will go down to around 2050. Okay, so that is the limit order at which I want to buy Reliance, but I want this 2050 limit order to purchase Reliance be in my order book already before the price comes. So what I'm going to do is I'm going to set my order price as 2065 or 2060, right, or even 2058 or even 55, anything that is slightly above this, so that when the price of Reliance from the level of 2200 is going down and approaching the level of 2050, what I want is that within the trading day itself, this stock, when it goes to 2058, this order gets put in my order book, so that as soon as the price touches the level of 2050, my order gets executed. That's what I want to do. That's what I personally prefer to do in my entry GTT orders, right? Everybody has their own strategies. I'm just sharing what I do. So this was about using GTT orders to make entries. Now there is obviously also use for GTT when you want to make exits. So let's take a look at how that works. So when you want to use GTT orders in order to make exit, you need to set firstly the trigger type to OCO from single. So in the previous slide, we saw that in order to do buy signals, you can only do single orders. You cannot do OCO, because in cash or delivery, you you cannot do shorting, right? You can only do long side. That's why when you're on a transaction type of buy, you can only do the single order type. But when you're on the order type of sell, you can do both single and OCO. Why? When would you use only single? When, say, you don't have a definite target, but you have a definite stop loss on a stock idea, that you know what, I'm willing to hold this stock for like the next 3 years, but at any point of time, if the stock goes below this particular level, I'm going to exit it, which might be a stop loss level for you, which can be like 5%, 3%, 10%, 15%, 20%, anything, right? So in that situation, basically for the buy and hold strategies, I always suggest that use at least the single type stop loss order for your positions. So what you're going to do, if you remember the trade setup that I just showed you, let me just pull it up again. Now for instance, this gold DM stock idea, right? So suppose you want to set up OCO order for gold DM. So what you're going to do is, here in the stop loss, where is my pen? There you go. So what you're going to do is, here in the stop loss itself, you're going to set the trigger price. So your stop loss level is 119. So you want to set, say, 118.5 as your stop loss, right? You can see stop loss written right here at the top. You can see target written right here. So there's no question of any confusion. So match stop loss with stop loss. 119 is your this thing. Now suppose with your experience, you've learned that, I would rather give a little bit more buffer to my stock price, take on maybe 50 paisa more risk and increase my this thing, because my risk reward is already more than 3. And for the trigger price, what you want is that if the price, say, it goes to 118, you want a limit price of 118.5 already set. So basically, if the stock goes as low as 118, right? So 18.5 is where you would rather exit the stock. and you say that, boss, if the stock price goes down to 18 rupees, then I would like to exit the stock at 18.5. So when it comes up at 18.5 exactly, your position is going to get executed and exited. Now naturally, when a stock moves down, no stock goes down in a straight line. They always, go down in a little bit of a swing. So that is why it is safe to have a small difference between your stop loss, your trigger, and your actual execution price. Now for the target, you're going to do the same thing. You can see that 199 is the target price. So what you want to do is you want to set up 199 in your execution, which is the limit price, which is the second price window. And in the trigger price, you want to make sure that this 199 order is already set in the book before the 199 price is touched. Why? Because you want that order to get executed as soon as the price is touched. So both for stop loss and for target price, when you're setting the sell OCO order, what you're going to do is you're going to take the exact levels of the stop loss and target given by your research analyst, which in this case is me. You're going to enter that in the price, and in the trigger prices, you're going to take prices which is slightly lower than your actual price, so that you get a more advantageous execution. Okay, so that is how you do it. Now there can be another way of doing this, and for that we're going to look at the next slide, where you can also refer to the percentages. Okay, so let's bring back the Goldium template again and take another look at that. So on this template itself, which I provide to my members for every stock idea, you can clearly see that the levels are mentioned not just in amount but also in percentage. So this is what I'm talking about. You can see that the stop loss, how far the stop loss is from the current market price, is also being shown here. So let me actually do one more thing for you. Give me a second. I am trying to make this slightly more informational. So I'm going to take a more recent stock idea for this because I want to demonstrate one point. So this is a more recent stock idea. So now in this stock idea, if you notice carefully, you will see that the stop loss percentage, which is parallel to which is alongside the LTP, is different from the other stop loss percentage. So the top stop loss percentage actually pertains to the stop loss versus the spot price. So that is 2.7. But since the stock has moved 2.3% in our favor, our stop loss is now 2.3% bigger and a target is 2.3% smaller. So what you need to do is you need to update your GTT order. So what you're going to do is, once you get a trailing stop loss on this, right, which will end up to this, which will lead to this number getting changed, all you need to do is look at this particular percentage and enter this minus 4.89, right? Because here, if you see in Zerodha's GTT window, this percentage pertains to this LTP, and this LTP pertains to this LTP right here, right? So what you want to do is you want to use this percentage stop distance of the stop loss in percentage term from the LTP, and you can enter it in the percentage window for both stop loss and target, and then enter your actual execution limit price manually. So this is just another way of using the GTT order. Okay, now moving on. So with this, we have pretty much come to the end of the discussion about GTT orders and bracket orders and how you can use them to create new positions in stocks, accumulate more stocks at favorable prices, like when the market is down or when the stock is near some support, or the RSI is giving you a signal of basically RSI on the intraday chart can be, say, at 30 during a bull run in the market, which is a good level to enter the stock a lot of times, not always of course, but a lot of times. But there are a lot of variable moving parts in this, and when you start thinking about each of them and start giving them a structure, your chances of survival and success in the stock market become a lot more plausible. Okay, so with this, I have come to the end of my presentation. Thank you so much for attending today's session. Before taking your leave, what I'm going to do is I will turn towards your comments and take a look at what questions you have for me. Okay, so I'm going to answer your questions about stock queries now. So if you have any questions, feel free to put them down in the comment section below. Okay, while you put your questions on, I'm going to take a little bit of a timeout to set up my chart screen. All right, so let's see. Sandeep ji, I see you are from Mumbai. Mumbai is one of my favorite cities in the country, so that's great. Uh, in share HW, how can I do SIP? I'm not sure what is HW. But in any stock, if you want to do an SIP, there are sophisticated tools available with other brokers. I don't think Zerodha gives a specific stock level SIP to you, but there are other tools, or you can do SIP with even small cases, but with specifically for one stock, you'll have to be a little bit more manual in terms of that like every week or every month, particular quantity of any stock or rupee amount value gets executed, that's going to be a little bit more more manual of a process. So Rohan Satheji said he was waiting for the live stream, so I hope you were able to join. You said you're struggling for Nifty levels. So Rohan, what problem are you experiencing with your Nifty levels? If you could just tell me, maybe I'll be able to help you better. So Yashraj ji, I've already answered for you. So let's see. Nifty today, we see Nifty. So last couple days, basically Nifty took very strong support at the level of 17,600 is what I can see. And today we are seeing like super strong momentum in the stock, in the index itself. And with this momentum, I believe there is a strong resistance at the level of 17,800. And this is something which I've been repeating like a parrot since I don't know how many weeks now, that 17,800 is a strong resistance. 17,800 becomes a strong support when Nifty goes above it. But right now, since Nifty is obviously below that level, 17,800 will act as a strong resistance as and when we reach it. Right now, we are only around 60 points away from it, as I see. 17,737 is where we are trading at. So we'll have to wait and watch whether Nifty manages to cross above the level of 17,800 or not, because it's very, very important. However, to call this a proper bull run, or rather to be confident that we're heading higher, Nifty needs to sustain itself above the level of 18,000 and 18,200. So that is going to be very, very important. So with that, we've come to an end of this live session. And if you like this session, don't forget to give it a thumbs up and add your comments so that I can bring better and better sessions to you every single time. I will see you again on Wednesday at 2:30 p.m. with the Let's Get Technical series, where I bring to you intensely technical analysis related discussion with chart examples. So remember to stay tuned into that. So I will see you again on Wednesday. Thank you so much for joining in. Namaste.